Great to have you here with us. I'm curious, as you think about multi-asset strategy, we're having this debate between Tina and FOMO. Does it exist with inflows returning to bonds, yields finally falling once again? How are we thinking about the alternatives between equities and bonds at this moment?
Hi, Taylor. Thanks for having me. That's an excellent question. I would say it's looking a little bit more like FOMO at the moment. We are seeing not just yields going down, but also equities are doing well. So both the asset classes are simultaneously giving investors positive returns. At the moment, though, we are slightly more inclined to add to equities than bonds.
And what is that? Is that Anwiti, a valuation perspective, a technical perspective? Where is it that drives you to think the future gains are more likely in equities at the moment?
So it's really a great question, Caroline, because if you look at macro data, it hasn't improved at all, right? There's some improvement in the services PMIs that came out this week, but by and large, the breadth of the data is showing weakening economic activity. So it's very much driven by positioning and sentiment at this point, and that's what's driving the markets.
When you think about what's driving the markets, you wonder what forces not only win, but which will lose. To the trades that you're seeing put on today, which are the ones that are maybe a little short-lived?
That's an excellent question. So I think the one that looks a little short-lived to me is sort of the money going into the speculative segments of the market again. So money going into these names which don't have a lot of earnings support behind them. But by and large, tech sector is going to do well. And broadly, U.S. equities are very attractive to us.
What do you make of in many ways, the reopening of some of the bond markets with Apple, Meta this week tapping the debt markets for Meta, of course, the first time? Does this sort of signal that credit markets are open, that the liquidity sort of calmness has returned, or is this just a pause maybe for a rougher storm ahead?
Yeah, so it might be a pause, very much so. We have, if you look back to mid-June, when S&P hit 3650, we've seen almost a 14% rise in S&P since then. And it's quite reasonable to expect some pause in this rally, and very much depends on how the macro fundamentals play out from here. So just before I came on the show, you guys were discussing the payroll data. The payroll data is extremely important. That will be a major signal to the markets on whether labor market has started declining. So everyone's worried about inflation, but the Fed is also looking at their employment mandate, and so far that's been rock solid. So tomorrow's data is key in determining whether we're beginning to see cracks in the labor data also.
Anwiti, what we saw today is also, this is a global story. This is a Bank of England fight. This is, of course, probably later on Friday, we'll also hear from the Reserve Bank of India as well. They're likely to be raising rates, like from emerging markets to developed world. We're all trying to fight the same thing. Are you likely to see, well, an interest in buying a field at the moment, or is really domestic stocks where you need to be placing your money?
Right, again, an excellent question, Caroline. I think one of the areas that we find very attractive is actually China. We have been adding to equities there. That has taken a step down in, again, the last few weeks because of the tension around the Taiwan issue. But we think that's one area investors should definitely look at. That's derated very sharply over the last, I think, since mid-March or so, and that's one area that we would look to add to.
It's interesting because that's a geopolitical risk. You saw supply chain issues and all these other risks when you thought about the cross-border investment thesis here and the ability to invest in China. Have those gone away, or are they lurking under the surface?
I think those are very well-known issues, Sonali, and they haven't gone away. I think they're very well priced into the markets. And, you have to be tactical in these areas, and these are times where we do find them attractive. but one has to stay on top of those issues. Those areas currently reflect the fear around these areas, and we are taking some we're putting some chips on the table at the moment.